Many taxpayers think their tax refund is set by the IRS or other government agencies, the tax laws, fate, karma, or just chance. In reality, it is set by you each year and throughout the year. How? By the taxes you pay through withholding money from your paycheck or estimated tax payments you make. If you withhold too much, you'll get it back as a tax refund. If you withhold too little, you could end up owing, so it's important to get it right. A tax expert can help. Today we'll be talking about how the W-4 can impact your taxes, your tax return, and your tax refund, or lack of one. I'm Mark Steber, Chief Tax Information Officer at Jackson Hewitt. What is the Form W-4 Employee Withholding Certificate, you ask? Well, a W-4 is what you complete for your employer to determine how much money should be withheld from your paycheck for federal income taxes. If you're an employee, or were, or will be, you will see this form, even if you don't recognize it. This is not a form that should be completed by self-employed taxpayers, just those who work for employers. And filling out your W-4 form is really important because it not only affects how much your paycheck amount is, but it will help you either avoid owing a balance come tax day or overpaying the government throughout the year. And there have been big changes to the W-4 in recent years that you might have missed. In 2020, the IRS made significant changes to this form, which they hadn't touched since the 1980s. The IRS made these changes to simplify the process of reporting what you want withheld on your paycheck. The largest change is that allowances no longer exist. The newer W-4 also allows you to file as head of household, as well as removing the option to claim exemptions. But there were other changes and impact as well, and you need to know about them. In particular, if you were in any way disappointed by tax refund shock last year. What's the purpose of a W-4? Well, as an employee, you cannot control your Social Security and Medicare tax withheld from your pay, or any state mandatory fund contributions, such as family leave and disability funds. However, you can control how much federal income tax is automatically withheld from each paycheck by completing your Form W-4. This form helps you estimate your annual income, deduct dependent-related benefits, and request any additional dollar amounts to be withheld. In summary, the form tries to match the taxes you owe each paycheck and throughout the year with taxes you ultimately need to pay for the year. The tax withheld is based on several factors, including your filing status, how often your employer pays you, the expected income from the job, and your other income and deductions. There's also another critical factor which I'll talk about at the end of this video. How do you fill out a W-4? Well, a W-4 seems simple, especially after the redo of 2020. But do not be fooled. It still has many important parts and key fields to determine how much tax is withheld from your pay. Step 1 at the top, like most forms, you enter your personal information. This includes things like the correct spelling of your legal name, no nicknames, as well as your home mailing address, Social Security number, and tax filing status. Step 2, in this area of the form, you review your life and earning situation. Here you account for multiple jobs if your spouse works, because that has a big impact on how much total income on which your tax rate is based, and if your spouse works, which can have the same impact. This area should only be filled out if you have more than one job at a time, or if you're married and filing jointly and your spouse also works. It's really more guidance than actual lines for information, but it is critically important to understand and to follow if you make more than one stream of income, either from more than one job, or if your spouse works, or from a side gig, all of which can determine final taxes. And you need to consider this for this W-4 for taxes withheld to make sure you have enough. Now, if you don't want your employer to know that you have another job, or that you get income from other non-job sources, you have a few options. On line 4C, you can tell your employer to withhold extra, or if you don't factor the other income for this form, you can just send the IRS estimated tax payments directly. But do not ignore these important guidelines in Section 2 if you have more than one stream of income, or you're filing a joint return. Step 3, here you account for and claim dependents and children, which per our other videos can have a dramatic impact on your taxes and tax refund. if your total income is under $200,000 if you're single or $400,000 if you're filing jointly, you can enter how many kids and dependents you have and multiply them by the accredited amount listed on the form. A couple of things to know about this section that I often see people make mistakes. If you're both working, only one of you should claim the children. And generally, it's whomever has the higher paying job. That's because if you both each allow for the children related on your tax credits on your W-4, you could end up not withholding enough and then have to pay the IRS instead of getting a refund during tax time. Pay attention to this area and coordinate with your spouse or other job if you have one, or have risk of refund shock and not the good kind. Step 4. Remember at the beginning of the video, I mentioned one other critical factor? Well, that is the area in Step 4 on the W-4 form. This is the place to make other adjustments to refine your withholding amount, or as what I refer to, the place for one-stop shopping on your tax withholding, and a critically important line. Here's where you can account for other income you receive from your employer that you'd like to take adjustment on, including other income. Amounts added here will increase your withholding. Deductions. Amounts added here will decrease your withholding. And the most important line on the form as far as I'm concerned, line 4C, extra withholding. Amounts added here will increase your tax withholding. During the year, as you do your mid-year and year-end tax projections, which you are doing those, right? Well, you should be, but that's another video. And decide for whatever reason you want a few extra dollars withheld from your pay to increase your refund, reduce a balance due, or it's just extra cushion, you include those amounts here on 4C. An extra $25 or $50 or $100 per paycheck can add up over time and help on your complicated tax world, your extra job, your other job, self-employment, your spouse not having enough withheld, or just want a bigger tax refund. It is the most important line to control your taxes, your tax refund, lack thereof, or whatever you want to have happen on your tax return. As I said from the start, no luck or law or comma controls your tax situation. It is income and life facts and end of day which starts and ends with the Form W-4. Step 5. Sign and date the document or e-sign it on your company HR system. Easy as that. Can you adjust your W-4? Yes, sometimes people misunderstand that they can only touch their W-4 form when they first accept their job, and that's not true. The W-4 and how much you withhold can be adjusted more than once. In fact, in the time of computer and technology evolution, you can do it fast and easy, remote or in person. You can change it once a year or once a month. Really as often as you like and without limit. Generally. Although your HR or payroll person might have some issues with your weekly updates, but that's rare. Honestly, I recommend reviewing your W-4 every year, or at least every 2 years, or at least having a tax expert look at it when you file your tax return each year. But at a minimum, you should consider updating your withholding on your W-4 and making personal adjustments in the following situations. Early in the calendar year, if you had a tax refund disappointment situation, or if you are increasing or decreasing other income, in particular if you're working multiple jobs or pick up a side hustle, even if that's self-employment income. When there's a tax law change that directly impacts you, it might not automatically flow through your pay. When you have a major life change like getting married or divorced, have or adopt a child, as well as when your child reaches the age of 17, you buy a home, you retire, or file Chapter 11 bankruptcy. If you receive interest or dividends, capital gains, self-employment income, IRA distributions, or other income with no tax withholding that you're likely to owe taxes at tax time. Are there variations of the W-4 form? Well, yes. While only a Form W-4 can be given to employers, there are other forms in this series. The W-4P for retirement or pension income, and the W-4V for government payments like Social Security benefits and unemployment withholding is voluntary for these types of income, but recommended since they are subject to income tax. If you don't have tax taken out during the year for these types of income, you'll need to pay it when you file your taxes, which could lower your refund or potentially cause you to owe money. Additionally, there's a state W-4 equivalent form, and you should not overlook it if you live in a state with income taxes and they don't use the federal W-4. For example, New York residents must fill out an IT-2104, which has the same purpose as the W-4, except it's for state and city taxes. What common mistakes should you avoid when filling out your W-4? First, don't worry. You can correct mistakes after you've filled out the W-4. It's not a document that cannot be updated. Here are the most 5 common mistakes I see when it comes to the W-4. Not using the correct filing status. Not making sure your form reflects your current dependents. And this is a big one with complex family structures. Divorce or shared custody are just 2 examples. Not adjusting it when you go through a big wage change, a big bonus, for example. Only looking at the form once and then never touching it again. Making an error that claims too much or not enough, and therefore not getting the paycheck amount or tax refund size you need at tax time. Also, keep in mind that a W-2 and a W-4 are different documents. A W-2 is a wage and tax statement that details how much you were paid by an employer during the year. If you have or had a job at any time during the year, you should receive a Form W-2 from each employer the following January, containing income information to report on your tax return. If you have questions, ask. You can ask our team of tax pros, and you can ask your employer for guidance. Don't simply guess, because that can lead to silly errors giving you results you don't want for your paychecks or your tax refund. If you only get one thing from this video, it's the importance of filling out the W-4 form accurately, and know you can change it as often as you like to more accurately reflect the tax outcome you want, be it a big tax refund, a small refund, or no refund at all. We're here to help you, so you don't have to guess. Income taxes are not going away, and you're going to fill out a tax return each year for decades. It should be taken seriously, especially when you're going through changes in your personal life. Like I said before, a W-4 shouldn't be a set-it-and-forget-it form. You can make adjustments and work with your employer until you're happy with your paycheck and your tax refund amount. Lastly, check out the free IRS withholding calculator at irs.gov. The calculator considers your income, deductions, and credits to provide you with an estimate. And that's it. We've covered the biggest things you need to know about the Form W-4. Have more questions? Schedule an appointment to talk with a tax pro today at jacksonhewitt.com. And if you found this video helpful, please give it a thumbs up. Subscribe to our channel for more valuable information and hit that notification bell to stay updated on all things taxes.